Okay, folks, this is going to be an incredibly jam-packed week, and we need to prepare violently. We also need to talk about the top 3 stocks heading into it and what you need to know about them. And the only thing that I ask in return for all of it is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's start with prep. So the market closed out on the green side of flat on Friday. Cryptos have been breathing a bit over the weekend, which is fairly standard. Cheeb trying to find some support. Upcoming notable earnings this week include Chegg on Monday, Pfizer, Corsair Gaming, and Zillow on Tuesday. Zillow had the idea of buying a ton of homes at the top of the market with the idea that they were then going to resell for a profit. And now they are struggling to offload them in many markets. Honestly, I think that business model is fine in the long run, and it's probably going to end up being a very, very lucrative idea given enough time. But in certain market conditions, it's not great. I'm looking forward to seeing their updated outlook on earnings. Roku, Qualcomm, Mr. Skills on Wednesday. With Skills, remember what we are looking for is members, paying member growth expansion, and lowering cost of customer acquisition. Fastly and Etsy, which often find themselves as hype and momentum stocks, are also reporting on that day. Now on Thursday, you have Moderna, Square Payments, Pinterest. The Pinterest earnings date is going to be quite Pinteresting because they have been completely devastated by several quarters of bad earnings and a recently BS acquisition report with PayPal. We'll see if they can make a turnaround. As we mentioned last week, Cathie Wood has been abandoning conviction. Let's see if she was right on that. And then Friday, you have the king of drafts, Coinbase, Excella, CGC. DraftKings is looking very, very juicy, as is Excella, and we'll talk more about that later in the video. But moving on Wednesday, you also have the Federal Reserve giving out one of their most important announcements. The prevailing hypothesis all year from central bankers was that inflation was going to be transitory, but because of this whole supply chain crisis continuing to be very, very stubborn, well, it's looking a little bit more inflammatory than it is transitory. And so on Wednesday, expectations are that the Fed may be more hawkish than ever. You also have the jobs report coming out on Friday, so very, very big week for the market. And I do have to warn you, historically, the stock market tends to be a little bit spooky after Halloween. Ghosts of Wall Street's past that didn't survive the 1980s party culture come back to haunt us and take a vengeance. But don't worry, these 80s ghosts are completely allergic to risk management. You show them a little bit of DD and a little bit of exit plans, and they're like, woo, I'm going back to the underworld. Okay, moving on, BKKT. So on the 25th on the channel, we talked about how BKKT had been seeing huge hype inflows thanks to a partnership with MasterCard and Pfizer V to offer crypto solutions for payments. And as the hype died off, we've been scouting out some rebound rally opportunities on the stock. And on Thursday's morning briefing, I said strong bull setup if it holds or later retakes support at 31.24. It failed to hold that criteria on Thursday, but then bounced on Friday, fitting the criteria, and retook support at 31.24 before rallying to over 46 in the after hours, 66% up on the day for the stock overall. And as to the question of whether to lock in profits, or rather whether there's more rebound rallies as this continues, well, during the uptrend on Friday, short interest did increase, which likely would balloon if BKKT sells off on Monday, accelerating that downtrend. Shorts pile on conviction a lot higher when the direction's going in their favor, so that would accelerate an already given direction. And attention may be dwindling thanks to that catalyst news already wearing off. On the flip side, we're but a few hairs from this breaking into a new momentum high. And with earnings on the 12th, perhaps the company also can announce some new partnerships prior, and there's some pre-anticipatory running. If you are a ZipTrader U member, make sure to check in 30 minutes prior to market open tomorrow morning for my latest take on BKKT. I'll update you on whether it's fitting my criteria, what the setup is looking like, new catalysts, and so forth. The pre-market and pre-market catalysts set the stage for how stocks are going to trade throughout the day, so it tends to be very, very powerful if you show up every single morning and do your work. And on the briefings, we actually help build a foundation for that, but still you should be doing that regardless of whether you're in our program. Okay, anyways, first top stock this week is DraftKings, the king of drafts, which will be reporting earnings on Friday. Historically, earnings tends to benefit DraftKings more than not. If you look, the last 4 earnings reports signified by the little phone and bulb slogan below, every single earnings date tends to result in either accelerating an uptrend or a few days later reversing a downtrend. Does that mean that pattern has to continue? No. But with historical support somewhere in the low 40s, we are close to trading in a very, very low range. I would also argue for deal seekers that if this beats down closer to these previous levels of support ahead of earnings, you have an obvious deal. The king of drafts is in a unique situation where they are cooling off from them deciding not to make the massive purchase of Intane, which investors were originally happy about, but then flipped and decided to keep selling afterwards. DraftKings is a story of a very, very popular proven company that has done very, very well in the markets that it's in and has a lot more markets that it could pillage, because legalization is a little bit on a rolling scale right now. But it's also the story of consistent action. You look at even the headlines for the last month. October 19th, Foxwoods and DraftKings launch online sports betting and iGaming in Connecticut. October 18th, New Hampshire Lottery and DraftKings expand sports betting. October 18th again, Polygon and DraftKings enter into a strategic blockchain agreement. October 13th, DraftKings becomes official sports betting, daily fantasy sports, and iGaming partner of the National Hockey League. October 7th, collaboration with notable charity, great media coverage, great cause here. October 4th, expansion with second largest office in the US based out of Vegas. September 29th, retail sports betting begins with Foxwoods Resorts Casino and DraftKings. But that aside, the real story is that DraftKings right now is again only operated in a handful of states, and its expansion plans are going to take a while. However, I tend to have a very, very mechanical way of looking at high conviction stocks. When they are discounted below what I see as fair value, I see them as buys. When they are trading above what I see as fair value, I see them as sells. Of course, you can see all my price targets in ZipTrader U, but basically I see this as a very, very, very good deal if it's in the lower 40s. As it grows into current markets and legalization expands, DraftKings will be incredibly competitive, and I think that states want sports betting. Why? Because it's a great way to raise money for taxes, and a lot of states are bankrupt and they need money. Plug. So context, before Plug's annual symposium earlier this month, we talked about how last year's symposium predated Plug's insane run to 75 and was what largely catalyzed the nearly constant media attention of the stock last year. I felt that this year we could see a similar situation, with that event causing more hype flows into the winter. Probably not as much as last year when we got peak euphoria everywhere, but almost certainly something. And it's gone from like 27 to almost 38 in a couple weeks, but why it's still relevant is that it's now broke past both previous peaks, meaning we are seeing the strongest momentum for the stock that we've seen in essentially 11 months. There's been continued positive news coverage for Plug, and the latest catalyst is on November 8th, not this week, but next week when they report earnings. You can also see Plug enjoying some sector sympathy with other stocks like ENPH, which have just been insane. My view is that the euphoria that we're now seeing in EVs is going to follow into the clean energy sector. Broader clean energy sector that has been largely beat down by the growth crash, as well as short sellers who wanted to push almost any clean energy stock to zero. Why do I think that this upcoming period is going to be very, very good for clean energy? Well, two reasons. Number one, the new spending proposal has trimmed down a lot of the administration's priorities, but clean energy and climate investments are still the single biggest line item by far on this list, with $555 billion in investments. That's nearly a third of the total proposed spending. Secondly, COP26 is happening. This is the UN climate change conference that tends to put a lot of pressure on world leaders to say what they are going to be doing to go more climate or earth friendly. All of these things are going to put actual capital and at least focus in the hands of a lot of these clean energy stocks. Of course, the funding and attention is also going to help companies like ChargePoint and EVgo, and to some extent Excella as well. But I wanted to highlight Plug because it has been fulfilling the setup that we've expected for the last couple of weeks. And when we propose a setup for a stock and it hits our proposed guidelines, then we start becoming more bullish on them. And so far, Plug has done that, and it's now hit a new breakout level, which looks strong from a technical standpoint. So Excella had been a earlier short squeeze candidate back in the summer that died off on lack of attention, but over the last week, attention has soared, and so has capital inflows, largely catalyzed by a notable partnership with a nonprofit and one of the largest Medicaid managed care plans in the nation. Excella offers business automation that helps make companies more efficient. Partnership will give Excella an opportunity to show more proof of concept for future potential customers, as well as, of course, draw more media coverage. Excella, like most small cap stocks, runs almost 100% on attention, and when attention dies off, the capital often dies off as well, at least at these early stages. The reason that I'm still making a relevant argument for Excella right now is number one, and first and foremost, because they're reporting earnings this week. And when you have a massive catalyst like we had last week, and then you have another catalyst this week, you have a time span where people can speculate on, okay, well, what's going to happen on earnings? How is this partnership going to factor into Excella's guidance? And then overall, the general meme speculation that you see with a lot of these short squeeze candidates. Now, Excella's short interest is fairly low, but still, this does have that meme-esque retail heavy following. Now, in terms of the technicals, what I said on Friday morning was basically that I see a strong bull setup on this as something that retakes that extended hour support at 193 and retains that price point later, followed by an attempt to break resistance at 228. Now, leading into market open tomorrow and this week, we are sitting very, very close to retaking that previous support, new resistance now at 193, and then bouncing back to that previous higher resistance at 228. Support and resistance isn't something that I look at as, oh, it has to bounce off this, or oh, it has to break out past this, or that it's always even relevant, but rather it's a specific signal that says, hey, wait a second, it's retaining value at this point, it's retained value from this before, this is going to induce more hype rallies, which is why I spend a lot of time talking about support and resistance. That said, with stocks that I don't have long-term high conviction in, I don't see holding through earnings as a smart decision. I'm making this argument based more on a pre-anticipatory reaction for Excella instead of a post-anticipatory reaction for Excella. Although both can be true, I just don't like the risk associated with holding through an earnings on a stock that you really don't care that much about over the long term. Anyways, folks, that's it for today. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade with our private chat, our daily morning briefings, as well as our step-by-step lessons, where we will walk you through everything that you need to know in order to learn how to better trade and manage your account in the stock of market, well, we'll go ahead and put a link to ZipTrader you below. This is not the type of course where you can buy it and get away without doing any work. This is something where you're expected to put a ton of work in and effort to get any sort of result. When I buy something, you better bet that I get every single dollar worth out of it. And I expect the same from you. Anyways, have a good one, and I'll see you in the next video.